go, here we go, yeah. At the top of the class on a roll, hey. And it's time to run it up, yeah, you know, yeah. Mask down, put the pedal to the floor, yeah. On a roll, here we go, here we go.
What is going on, everybody? Welcome back to the channel. And in today's video, I'm gonna be going over an indicator that you can use to find good entries and great exit points to get out of your trades before the trade goes south. But before we get into it, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these great indicator reviews or urgent market updates that we upload to the channel. And don't forget to check out frankiecandles.com, where we have a ton of really good deals that we've worked out for you guys, the Candle Mafia, for things such as Lux Algo, Themex, KuCoin, and tons of other things. So definitely don't forget to check that out. Like I said, today we're going to be taking a look at an indicator, and that indicator is the Chaikin money flow, or the CMF for short. Now, the CMF was created in the 1980s by a man named Mark Chaikin. Now, this guy was an absolute legend. He spent over 50 years making millions of dollars on Wall Street. He's been through 9 bear markets, and he's been on fast money countless times. So he's definitely worth looking into. Now, I don't just use this indicator because it works. I use this indicator because this guy knows what he's doing. Now, this indicator is very easy to use and is completely free on TradingView and most other trading platforms. Now, as you guys know, I do think it's important to kind of understand what makes up the indicator before you start using it. You don't have to get into the nitty-gritty of the numbers in most cases, but I do just like to give you guys a little bit of a gist of how it works. Now, the CMF is basically the volume-weighted average of accumulation and distribution over a time period of 21 days. It's ranged between -1 and 1 with 0 in the middle. Now, that 0 line is going to be something you want to pay attention to, because if the CMF crosses above or below that 0 line, it could indicate a reversal. But please understand, this is not an all-encompassing indicator that you can use by itself. You want to remember the fundamentals of trading. Just like any other indicator, you're going to want to use additional TA to add confirmations to this indicator. Again, do not use this by itself. You can use it alongside things like the RSI or Market Cipher B or the MACD. And if you guys don't know what I'm talking about, go ahead and binge watch all the videos on my YouTube channel. I teach you guys all about these indicators, and I give you some pretty good trading strategies based off of them. So without further ado, let's go ahead and jump into the charts. I'm going to show you how to get this indicator onto your charts, how to read it, and how you can use it and add it to your arsenal so you can have just one more really powerful tool in your trading tool belt. Let's get into it. So here we are on the Bitcoin 2-hour chart. And to add this indicator to your chart, you're going to want to go ahead up here to your indicators button and click there and type in CHAI, and you will see it pop up right here. We're not going to look at the Chaikin oscillator. We're going to look at the Chaikin money flow. So you can add it to your favorites by clicking that star, or just click right here. Now you can see the Chaikin money flow has been added to our chart. It's this green line down here. You have the 0 line in the middle. And you guys will remember I mentioned that this is very important because as the CMF crosses above or below the 0 line, it could signal a reversal. So right off the bat, you can see right here we had a crossover below the 0 line. And if you come straight up to your price action, you can see that this did indeed signal a downtrend or a trend reversal, right? We were in an uptrend here, and then we changed to a downtrend there, being called almost perfectly by the CMF. Now, just in general, when the CMF is above the 0 line, it indicates strength in the market. And when we're below the 0 line, it indicates weakness in the market. Now, just on a basic level, you want to realize that when the CMF is above the 0 line, it shows strength in the market. And when it is below the 0 line, it's showing weakness in the market. Now, you can use the CMF to confirm breakouts. For example, if you see that you are coming up to resistance and you start to break out through the resistance, what you would want to do is wait for the CMF to break above the zero line. Now you can see we did break above the zero line here before price got rejected back down, but we were above the zero line, indicating that there was strength in the market and that if we continued upward, we would get a pretty strong breakout above this level. And you can see the CMF started moving up. And more accurately, you can see here that we did break above this resistance, but the CMF was below the zero line. So what you would want to do in this case is wait for that zero line to crack back above that zero line to show strength in the market. And you can see as that happened, we continued to the upside. And then we kind of just crabbed sideways, right? And then as you get the crossover of the zero line again on the CMF, it would signal weakness in the market, letting you know that the trend could be reversing. And shortly thereafter, we actually did see the market reverse to the downside. So you can see this kind of helps you get better entries, right? Granted, you did continue down here before getting the bigger move, but it would stop you from getting into situations where you might think you're at the top and trying to short the market before getting another pump up. If the CMF is above the zero line, it might not be a good time to jump into the trade just yet. It would be better to wait for the CMF to cross the zero line, right? And you still get a pretty good entry. Even if you entered up here, you wouldn't have gotten that much better of an entry. If you waited for the CMF to cross below that zero line, you wouldn't have really gotten that much worse of an entry. And you can see right here, we did have a fake out above this resistance level, and then we got another fake out. But that doesn't matter to you because you're waiting for the CMF to crack above the zero line. And then right here, you see that happened. And granted, you would have taken a little bit of a ride. We did come up again. Now, you want to be careful. And this is why I say that you don't just want to use the CMF by itself, is because you can see here, you got a little bit of a crossover to the downside here, or it looked like it was at least going to cross over to the downside. And you're going to want to wait for a clear confirmation of the CMF below that zero line, because the zero line could act as support. And you see the CMF bounced off of this line, and we did come up again, and that could easily stop you out of a trade and absolutely get you wrecked. So you would want to wait for the confirmation below. In this case, you might have been watching price action come down, come down, come down. And you see we had the crossover here. If you waited one more candle, you would have gotten in right here on this candle. But because we were below the zero line showing weakness in the market, we knew it was going to be likely that even though we came down a lot, it was showing that there was a likely chance that we came down even more. And even if you came and waited for it to confirm on this candle, you still would have gotten a really nice move down. Now, I don't recommend trading just based off of what we were talking about. I just kind of wanted to explain how it works, but this is not exactly how you would want to enter and exit trades based off this indicator. What you would want to do for the buy and the sell signals for the CMF, and this is another thing that's really cool about this indicator, is the buy and the sell signals really come off of divergences. So you can see right here on your CMF, you are above the zero line, and you are showing a lower high on your CMF. And if you come up to your price action, you can see that price was actually putting in higher highs, creating that bearish divergence, essentially indicating that you could potentially come down, right? And again, you wouldn't want to enter until the CMF is below that zero line. So you would have gotten in on this candle somewhere. We'll be conservative and say you get halfway through and you ride it down for a 5% profit. Now you could enter on the actual divergence up here, and obviously you would have gotten a much, much better entry at about 8%. So, creeping up on double the move. But you want to understand that if you're not waiting for the confirmation below that zero line, you are being a little bit more risky. So just keep that in mind, but you will indeed get a better entry. But by using something like the ultimate MACD on the Lux Algo indicator, you can see we did get a sell signal on the ultimate MACD right here, which would have gotten us a pretty good entry, right? Whether you're basing it off of both of these lines crossing each other or the red histogram here, you would have gotten a pretty good entry. So this is kind of one way that you can add confirmations to the trade. If you guys want to sign up for Lux Algo, the link is in the description down below. We've worked out a great deal for you guys, the Candle Mafia, so definitely go check that out. It's a great indicator with things like the ultimate MACD, giving you those earlier entry and exit signals than the traditional MACD. And that's just one way that you can confirm these moves. You can also use things like Market Cipher A. You can see right here, we printed a blood diamond on the 2 hour, which we know is no joke. So that also was a perfect signal right there. So this is just some of the ways that you can kind of confirm these moves. And this is a bullish scenario. Again, this is very similar to your traditional divergences. You can see here that your CMF was making higher lows as your price was making lower lows, creating a bullish divergence. And then boom, you come up about 10%. And again, with that ultimate MACD, you can see we got a buy signal right about here, which would have gotten us a pretty good entry right at the bottom to ride it up for almost that full 10%, depending on where you exit your trade. So again, just really want to hammer home that point of using confirmations, whether that's with the RSI, MACD, Market Cipher A, Lux Algo, whatever it be, please use your confirmations. So guys, I think that's all I got for this video. I just wanted to give you guys kind of a basic intro to the Chaikin money flow. And maybe down the road, we could come out with an actual strategy video going a little more in depth on, where to actually enter and exit the trades. We did kind of do that in this video, but maybe we'll make a little bit more of an in-depth one. We can add another indicator in for, that confirmation, and we can back test it, 50 times or 100 times, whatever it might be. So go hit the charts, get the Chaikin money flow on your chart. Again, it's free. Go ahead and back test it. Try to find some divergences. Try to see where the CMF was saying where there's weakness in the market and see how price reacted. Then see where those reversal signals are, see how price reacted, and back test it, right? Don't just take random advice from some guy on YouTube. Go test it yourself and see how it works for you and if it would be a good addition to you and your trading tool belt. With all that being said, guys, I think that's all I got for this video. I'll see you in the next one. Frankie Candles out.